markets are bleeding despite the CPI reading coming to the downside. What is going on? Why did the markets rotate? And what impact has CPI just had? In order to understand this, we're gonna have to go back to the CPI reading we received last month. Yes, on August the 10th, we received the July CPI reading, which showed the first improvement in CPI, and that left markets feeling rather buoyant. We saw the markets rally, we saw a move up in Bitcoin towards that $25,000 mark as markets started to believe that Jerome Powell could be in to start pivoting. Pivoting is him loosening the neck around inflation. In other words, not going for as big rate hikes. They were hoping that he would come down to a 50 basis point rate hike. But then Jackson Hole Symposium, yes, Jerome Powell came out a couple of weeks ago at the Jackson Hole Symposium and he put the market back in its box. He came out hawkish, reminding the market that he's got a job to do and he'll do whatever it takes to bring inflation down. But do the markets listen? Absolutely not. The markets decided that they're going to price things in their own hands, and what they then went on to do was to say, coming up to this CPI reading today, that they think that Jerome Powell is going to pivot, not at the next meeting on September the 21st next week, but at the one following it on November the 2nd. Yes, they put it in their own minds that CPI was going to improve aggressively. Expectations for CPI were 8.1%. They came in at 8.3%. So whilst inflation came down from 8.5% all the way down to 8.3%, it is not enough for the markets, because markets were not just pricing in what the expectation was, which was between 8 and 8.1%. A lot of the markets were hoping for 7.9, 7.8%. And the more euphoria leading up to the CPI reading, the harder it crashes. So now the market is back to now thinking, oh no, Jerome Powell's not only going to have to do 75 basis point at the next meeting, but maybe he's going to have to do that in the meeting in November. They're now scared that inflation is sticky. It's not going away just yet, and there is more work left to be done. And they have reasons to believe that. First and foremost, we have to look at the rent. Rent went up 0.7% month on month. That is 8.4% annualized. Rental income accounts for 32% of the CPI reading. The higher rates go, the less people buy homes, the more people rent, causing more inflation. We did still see heightened inflation on food, on utilities such as electricity and gas, and also on new used vehicles. This is showing that inflation is still around. It's not been exterminated just yet. Jerome Powell, you've got to finish the job. So there is still this sticky inflation, and Jerome Powell still has work to do, which is why we are seeing Bitcoin tumble now down at the time of recording this video to 21,400 levels. Leading up to the CPI reading, we have the dollar index really starting to retrace. We lost its 4-hourly EMA ribbon, but now you're starting to see it fight back for its 4-hourly EMA ribbon and benefiting from this less weak inflation than expected. So what is next? Now the market is going to understand that there's still work to do. They're going to have to wait for the next CPI reading next month to see if there is any meaningful improvement again to the downside. But the reality is, over the long-term basis, we are seeing a trending improvement. This is still better than what it could have been. We've had times before, a couple of months ago, when inflation notched down and then the following month went even higher to post a higher high. At least this time we've had 2 consecutive months of inflation coming down to the downside, which is a huge improvement from where we have been. We have also seen an improvement in gas prices. Okay, if you look at the AAA website, you can see that gas prices have come down from $5.01 back to the $3.76. This is going to be good longer term for markets, because that excess money which consumers were spending on gas, they can slowly decide to spend that on growth stocks, which should be good for the Nasdaq and the equity markets longer term. But for today, traders are upset. Bitcoin is down 4.5%. We are going back into our 4-hourly EMA ribbon right now. Can Bitcoin bounce? Can they digest this over the next couple of days and say, hang on a second, it's not too bad? That is what we now need to look for. You've got this counterbalance because core inflation continued to rise. We had high core inflation coming in at higher levels. Core inflation was expected to come in at 6% year on year. Instead, it came in at 6.3% year on year. They expected the month on month change to 4.3%. Instead, it was 0.6%. That is a 7.2% annualized inflation on core CPI. So when you strip out food and energy, you can see that inflation is still persistent. There is more work left for Jerome Powell and his due, and that is going to continue to weigh on Bitcoin and the crypto markets. What does that mean for the Bitcoin pattern? As you can see, Bitcoin is trying to form a W bottom pattern, but you have to be aware that previously we formed similar pattern, and the bears have continued to throw us back down to the downside. So if and until we break this neckline at $24.4 thousand on Bitcoin, this W pattern is not materializing, and we have to pay respect to the bears who have control in the trend. The bears will continue to be happy with this inflation reading because that gives them a chance to continue to have a reason on the macro scale to push prices back down lower. What am I doing in the market? In the market, I'm looking for more opportunities to dollar cost average. I know it's frustrating. I know it's been long. I know a lot of you guys have been waiting to see green in the market. But as you can see, the hype came in. Fear and greed index today was sitting 35 today. Can you believe it? On the fear and greed index. That is the highest we've seen for a little while. We're just going to show the euphoria that came into the meeting today. Expectations for CPI were really, really high, and anything which missed their expectations was going to be punished, and we saw that. We were not far off expectations. We were 0.2%. Inflation still came down, but the market is punishing Bitcoin and growth assets due to the fact that inflation still seems a bit sticky and didn't come down to the level they were pricing in. We head on over to the next FOMC meeting, the 21st of September, just 8 days away from now. We will be covering it. We need to see, does Jerome Powell go ahead with 75 basis points, or is he going to shock the market with a surprise 100 basis points, which are not currently priced in? It's not currently priced in. Will he shock the market with an extra hike just to make sure he squished inflation, or will he plow on with another 75 basis points and maybe another one in the following month to make sure he finishes it off? All to be played for. Still shaky markets. We'll continue to navigate it. Hope you guys enjoyed this video. Smash the likes and subscribe, and I'll see you in the next one.